The death of the white picket fence. The American dream of homeownership has officially been moved behind a paywall that 80% of the population cannot bypass. We have entered 2026 and the headlines are still calling it a market correction. But the math reveals something far more permanent, a liquidation of the middle class. To make housing affordable again, to return to the baseline of 2019, one of two things must happen. Home prices must crater by 35%, or your household income must jump by 56%. Neither is going to happen. We have officially crossed the event horizon into the renter nation era. Data released this year confirms that the United States is now facing a structural deficit of 20 million homes. With mortgage rates stubbornly calcified above 6%, the ladder has been pulled up. In this video, we're going to show you why this isn't a bubble that's going to pop. It's a cage that's being locked. Welcome to the final stage of the wealth timeline, the permanent shortage. The historical betrayal. To understand why you can't buy a home in 2026, we have to look back at the post-World War II era. In 1946, the U.S. faced a massive housing crisis. The solution then was a government-backed construction boom. We built entire cities from scratch because the leadership understood a fundamental truth. The stability of a nation depends on its citizens owning a piece of the earth. But look at the difference today. In the 1950s, the average house cost roughly 2.2 times the average annual salary. A single breadwinner could pay off a mortgage in 15 years. Today, that ratio has exploded to nearly 8 times the median income. We stopped being a nation that builds for its people and became a nation that regulates for its incumbents. We aren't just missing 20 million homes, we have intentionally made it illegal to build them. The zoning war, new. The shortage isn't just about a lack of wood and nails, it's about invisible borders. In nearly every major American city, 75% of the land is zoned exclusively for single-family detached homes. This is the zoning trap. By banning duplexes, townhomes, and affordable apartments, local governments have ensured that the supply can never meet the demand of a growing population. We are using laws from the 1970s to manage a population in 2026. This creates an artificial scarcity that benefits only one group, existing homeowners and corporate landlords. Every time a new development is blocked by a "not in my backyard" protest, the value of existing homes ticks up, and another 1,000 young families are pushed into permanent rental status. We have weaponized local bureaucracy to protect the equity of the few at the expense of the survival of the many. The mathematical cage. The 20 million unit shortage is the result of a 15-year construction drought that began after the 2008 crash. We spent a decade underbuilding, and then we hit the mid-20s with a demographic tidal wave. Look at the mortgage rates. In the 90s, 6% was a gift. Today, it's a death sentence. When your debt is priced at 6% on a $500,000 starter home, you aren't paying for a house. You're paying a lifetime of interest to a bank. This has triggered the lock-in effect. Millions of homeowners are sitting on 3% mortgages from years ago. They are golden handcuffed. If they move, their monthly payment doubles for the exact same square footage. The secondary market has effectively evaporated. People aren't moving because they can't afford to leave their current interest rate. The inventory isn't just low, it's frozen in amber. The credit score. Mirage, new. Even if you find a house, and even if you have the down payment, the gatekeepers have changed the locks. In 2026, The credit score has evolved from a measure of reliability into a tool of social exclusion. Banks have tightened lending standards to the point where only the perfect borrower exists, while corporate investors with infinite lines of credit buy up entire blocks in cash. The average American is poked and prodded by algorithms. A single medical debt or a high credit utilization during an inflationary spike can disqualify you for a decade. We have created a system where the people who need the housing most are the least likely to get the funding. Meanwhile, the shadow winners, the private equity firms, use your tax dollars funneled through the banking system to outbid you on the very house you were trying to buy. The rise of the shadow landlords. While you are fighting for a 1,200 square foot fixer-upper, institutional investors are playing a different game. This year, reports show that private equity giants and sovereign wealth funds own nearly 20% of all single-family rentals in key metropolitan areas. They don't care about mortgage rates. They buy in cash. They aren't looking for a home. They are looking for yield. To them, your neighborhood is just a high-interest savings account. We have shifted from a property-owning democracy to a subscription-based society. You subscribe to your car, your software, and now your shelter. This is the ultimate wealth transfer. Equity, the primary engine of middle-class wealth, is being diverted into the balance sheets of the 0.1%. The death of mobility. This shortage does more than just make you poor, it makes you a prisoner. Historically, the American economy thrived because people could move to where the jobs were. But now the rent trap has killed mobility. When rent in a high-growth city takes up 50% of your income, you can't afford to move there for a better job. You are stuck where you are, not because of a lack of talent, but because of a lack of a roof. We are seeing the rise of multi-generational gridlock. Adult children can't leave their parents' basements, and aging parents can't downsize because there's nothing to buy. The entire life cycle of the American family has stalled. The 20 million home gap is a wall that is invisible, yet more impenetrable than any physical border. The end game. So, what happens next? The great bifurcation is hitting the housing market first. There are now two Americas, those who inherited real estate or bought before the surge, and those who are permanently locked out. The 20 million unit gap is a physical barrier that no first-time homebuyer grant can fix. You cannot subsidize supply that doesn't exist. Subsidies only increase demand, which simply pushes prices higher. The rent-to-income ratio in major cities is hovering at 45%. That is a terminal number. It leaves zero room for retirement savings or health care. If you spend half your life's work just to keep a roof over your head, you aren't a homeowner. You're a serf with a Wi-Fi connection. The 20 million home shortage is the final nail in the coffin of the old American dream. The math is clear. The system is no longer designed to house you. It is designed to harvest you. Stop waiting for the crash that will save you. In a world of 20 million missing units, the shortage is the floor. If you want to survive the wealth timeline, you must stop thinking like a consumer and start thinking like a predator in this new economy. Check the inventory. Look at the interest-to-income ratio. The era of owning the dirt beneath your feet is ending. Act accordingly.